And we are live. This is Travis Witherspoon from Candlestick Capital, helping you fight for your financial freedom throughout the Forex market. I have 8:59 p.m. We're 1 minute away from obviously the 9 p.m. bell. There we go. Um, we are going to end up taking a look at some overall trading opportunities and everything else like that, like we always do. Tomorrow is non-farm payroll, and typically when we end up trading, we don't necessarily end up getting ourselves into a position to where we're necessarily interested in being able to make a large move, but on non-farm payroll Fridays. But we are going to end up talking, so let's go ahead and jump into it. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from the education, you can be able to make your own informed decision. Now, understand that trading involves risk. It involves risk of being able to make money. Also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up losing money or making money yesterday, it is not promised that you can end up making money the next day. Now, as we go through and be able to do all other stuff, I'm going to show myself onto the screen. Hopefully, everybody is doing very well. For the people that will end up popping inside of the live stream, for our first time watchers and and everybody else that's been tuning into what we've been doing over the course of the last few months. One, thank you for being able to pop in. My name is Travis. I am have been trading for about 6 years professionally, and quite frankly, the owner of Candlestick Capital, basically a trading company that ends up helping you when it comes down to education, when it comes down to automation systems and everything else like that. What we do here is that we end up taking a look at the overall market, being able to see what happened. This is more of a recap portion of the overall trading. This is a trading strategy for what could happen, particularly tonight. And typically on Thursdays, especially right before non-farm payroll, I end up giving out a game plan for what I would end up doing if I was in your shoes. Now, obviously, you can believe me, you cannot believe me, you can do whatever else that you want to do. Obviously, this does not constitute a financial advice, it constitutes education. But we will go through and take a look at everything when it comes down to that. Now, while I'm doing that, for the people that are live, please make sure that you end up tapping in. One, make sure that you end up saying, hey, it's always good to talk to everybody. There we go. What's going on, Steve? What's going on, Block? Hope everybody's doing very well. Inside of the chat box, one, make sure that you end up saying, hey, but also talk about your day when it came down to trading. Was it green, was it red, or did you stay away? I'm gonna go ahead and place inside of my chat and say what I ended up doing. I stayed the heck away. Quite frankly, this was one of the first days in about a few months that I did not necessarily make a trade during the 8:30 to 9:30 time. I ended up taking some trades early this morning. We ended up talking about those. They got triggered in from my automation system, but I quickly turned those off. Typically, I don't like trading the day before non-farm payroll. That's just my personal opinion. The market's too stagnant for me to be able to try to make a big move when it comes down to that. But Steve, how did you do today? Block, how did you do today? Everybody else that's checking in, everybody else that's subscribed. How well did you do today? Was it a green day or was it a red day? I want to take the poll for everybody, kind of check the post for everything. Let's see. Is my sound off? Let's see if my sound off. Okay, good to go. Good to go. Good. So, Block, answer this question: green day or red day, or did you stay away? Me personally, I stayed away. I didn't make any moves today. I didn't personally do anything. Aside from early this morning, there was some trades from last night that I ended up getting into. But pretty much there wasn't much of anything that I ended up doing. All right, so let's talk about the economic calendar. Let's talk about what's going to end up happening tomorrow. Let's talk about the game plan overall. My game plan is always the same when it comes down to non-farm payroll, but for new people that are watching, let's go ahead and get into it. Today's session will probably end up being a very quick one. Not making any trades until after 8:30 to kind of see what's going to happen anyway. So we'll kind of go from there. Retail sales end up coming out from the Eurozone. That was actually negative. Green Day took one manual trade. Nice. And then after that, we end up having Bank of Canada, Governor Macklin ended up speaking a little bit earlier today. And then after that, we really didn't have that much. Going into tomorrow, we have non-farm payroll. That's going to end up happening at 8:30. If you're not familiar with what non-farm payroll is, there we go. It's basically new jobs, 2 green days on the algo. Nice. There you go, 3 for 3. I'll take that. Non-farm payroll is basically talking about how many new jobs have been created over the course of the last month. And in this case, we're going to check and see how well did September do when it came down to new jobs that were basically created. The month previous, there were 315,000 new jobs actually created. What they're actually projecting is that there was going to end up being 250,000 new jobs created in September. Now, typically September is a down month when it comes down to jobs, because typically when it comes down to education and everything else, typically August is the month where you end up seeing the numbers when it comes down to education, and all of those other sectors. Typically in September, you don't necessarily see those great of a numbers. So kind of taking a look at this and kind of just thinking about where the market actually is. I said this before, and I actually said this inside of the Discord channel. I don't believe that there's going to be a true direction that's going to be made based off of the news that comes out tomorrow, unless it's just something that is great, or something that is surprising, or something that's even very much disappointing. Uh, I just think that it's probably going to end up jumping up, jumping down, going back sideways, and then after that, continuing to make its move from there. So I'm going to talk about what I would end up doing from an overall game plan perspective, but that is what I think ultimately is going to end up happening. Just before we even take a look at the charts, um, unemployment rate is going to end up coming out from the Canadian dollar. Typically, the Canadian dollar typically explodes when you end up seeing movements like that. So U.S. CAD, yen, a few of those other pairs. We'll take a look at those as well to kind of get an example of what may end up happening as we go through and take a look at the charts. Let's go through the big three real quick. And also, if you are inside of this chat and you want to take a look at a pair today, please make sure that you end up placing that in. I'm going to try to speed through all of this stuff and be done by 9:30. That is my goal. I would like to be able to get in and get out before 9:30 today, and go from there. So let's start off with United States dollar. Let's go through it real quick. United States dollar broke out of that. Okay, that's wrong. Let's see. Okay, good. Weekly, we end up seeing that the market hit the extension. We end up having that full break. We had an indecision candlestick. I ended up talking about at the beginning of the week that it was probably going to end up being a good chance that we could see a evening star based off of the market basically retesting that daily zone before being able to pop back up. At this particular point, what ended up happening was that, okay, that's the reason why it looks weird. That makes more sense. That's the reason why it looks weird. There we go. What ended up happening was that from a daily perspective, we end up getting the evening star candlestick. We end up seeing the market basically come back and turn this past resistance into a future support. And then after that, started to push up from there. So if you look at the daily's in a buy zone. There's a full counter trend line break, which would suggest that the market is going to end up going up to the upside. We take a look at the weekly. We end up seeing that the weekly has hit the extension and is in the sell zone. And we're basically retesting this overall move. So that short-term move, we end up showing that the market is actually to the downside. And there's a D extension that has been hit. For me, what that means to me more than anything else is that ultimately, I think from a short-term perspective, that the market will go up. I think that the United States dollar in general will end up going up in value. Now, the question is, because I see that, will I end up making a trade off of that? The answer is no. And the reason why the answer is, to be honest, is no, is because the weekly end up hitting the weekly end up hitting the D extension. And typically when the weekly hits the D extension, then this movement right here is just nothing more than a retest of this overall candlestick. And even though I believe that it may end up going up, there's no guarantee that the market will end up giving us any great movement tomorrow to be able to decipher what the move actually is going to end up being, and especially if we end up getting bad news. So I'm probably going to sit on my hands on this one. I can see that the market is building out a channel. There's a good chance that the market could fall down. Obviously, the market is really not moving because of the wait for the news tomorrow. But I'm not jonesing on this one. This is not one that screams out, "Hey, you need to trade me." So United States dollar pairs, I'm going to kind of stay away from. Let's take a look at oil. Oil, I end up getting out of the trading pair that I was in. Felt comfortable with getting out of it, only because I ended up seeing that it went back into consolidation, and the market was in a weekly. But if we take a look at the downside move, the weekly is had a full counter trend line break of this downward channel. We take a look at what's happening based off of the daily. We see that the market ended up having a break, but it has not had a retest yet. So we have a breakout, but there was never a retest. So that means to me that the market probably might end up falling for a few days before actually being able to push back up. Now, remember, when you look at Japanese candlesticks or anything else like that, from a daily perspective, it typically takes about 7 to 11 candlesticks of overall retracement before the market will start to push back up. That's the same thing if the market, in any direction, typically there's 7 to 11 candlesticks from the sell zone to the buy zone. So that means to me that we may end up going into next week and seeing that the market may end up starting to retrace on oil, and then after that starting to push back up after the market is ready to be able to go. Obviously, we have 2 days. We have 2 areas of consolidation that end up happening in early September that have to be broken before that happens. So for me, overall, once again, not a pair that I'm interested in being able to trade. I did not trade it. I did not trade it today, even though the market ended up breaking out of the overall area. If you did trade it, the last 2 hours actually solidified that the market was truly not ready to be able to make a decision in any type of direction at this particular point. So once again, going to stay away at this particular point. I'm going to wait and see how the market kind of reacts. Obviously, look at the Canadian dollar and kind of get an idea about what's happening with the market. Obviously, oil will end up telling you what's going to end up happening as well. Okay, so we end up going from there. Taking a look at gold. Gold broke over 1,700, didn't it? I think it did. Oh yeah, it broke over 1,700. Well, it's been over 1,700. That's not necessarily the best way to be able to explain that. Market broke above 1,685. Once it broke above 1,685, it did not have a solid retracement. We talked about the 382. I'm sorry. We talked about the market not pushing below the 382. So there was an 80-20 rule that was in effect that could probably end up making this market reject. That's exactly what ended up happening. Market got up to the 127, and then after that started to reject from there. We do have a natural support. That natural support has hit about twice at this particular juncture. We have somewhat of a natural resistance right around the 1730 area, and the support will be right around, let's see what this candlestick is, right around 1700. So we got about a 30-point consolidation area. As long as the market stays in the middle, there's no reason for me to be able to trade at this particular point. I'm going to stay away on gold as well. So US yen is probably US yen is probably not something to be able to take a look at. Take a look at what's happening with the Canadian dollar pairs. They're probably in consolidation, getting ready for unemployment rate. Typically, the market slows down on that pair as well before the news actually ends up coming out. So we're getting to a point to where obviously tonight until about 8:30, there's really no moves to be able to take overall when it comes down to this. So let me talk about my game plan real quick on non-farm payroll days, and I'm going to be very brief. I'm going to be very brief on what I end up saying, but hopefully it ends up making a lot of sense. And if you have a plan when it comes down to high impact news days, place it inside of the chat box. I want to be able to see where everybody's thought process is when it comes down to what they think. My simple rule when it comes down to high impact news, especially non-farm payroll, especially interest rate decisions, especially anytime that Jerome Powell ends up speaking, FOMC or anything else like that, is very simple. I wait 15 minutes after the news or the information has been given out. I want everyone else to be able to fight and be able to push the market up or push the market down or push the market sideways and everything else like that before being able to jump into the move. Now, what that truly means is sometimes I may not necessarily be able to get into a move because the move is already done went. Typically, what you end up seeing is based off of news, you end up seeing the market may end up having a big jolt in one direction. Let's say the market end up pushing up. And then after that, that's for the first 5 minutes. The next 5 minutes, the market is basically retracing from that overall area, basically making a correction. Sometimes it makes a full 100% correction. Sometimes it doesn't. But then after that, from that 10-minute to 15-minute, you will start to see that the market will start to be able to give you a direction. And from that direction, as long as the market ends up breaking out of the overall consolidation area where the market had started that overall movement the previous days before, then after that, I will feel comfortable with being able to take a trade. If the market from that 5 to 10 minute range ends up turning around, then after that, I just wait. I just wait. There's really no reason to be able to do it. Block says I usually ladder into my trades slowly on news days, not full size. Yeah, I don't think that you ever should go with your regular percentage trade on what you end up doing. I don't care how comfortable you feel on what you think the news is going to do or anything else like that, because news lies. Um, it's always either 0.5% or 1% of your account. It never should be more, especially within that first 15 minutes. To me, it doesn't make any sense to be able to do it like that. At that point, you're just gambling. You might as well just go ahead and buy a scratch off ticket and then see if you're going to win the lottery. Sometimes you win, sometimes you ain't going to get anything, and most of the time you ain't going to get anything when it comes down to that movement. Now, one other thing that I will say is of beware of stop hunts and beware of this large movements that just do not make any sense. On high impact news days, that happens more than anything else. That you will see from a technical standpoint that, let's say, the market should fall, market should fall, market should fall, market should fall. You see the market fall. Okay, it's done moved in your direction. And then after that, I give you a perfect example. As a matter of fact, I give you a perfect example. Where's this thing at? Where are you at? Because it happened to me on US 30. Where are you at? Let's see. Da, 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 da. Okay, no, that day. I remember seeing that. That's last week sometime. Uh, Probably should do it based off of the 15 minute. So I think there was one time. I think it was one time. The last time that Jerome Powell ended up speaking, uh, I was for certain that the market was going to end up pushing to the downside. Um, and there it is, right there. That's the move, right there. So market was in consolidation. We ended up talking about this. This was from 9:16 all the way until the news ended up coming out on 9:21, right? So markets in consolidation. Done build out a strong consolidation over the course of the last 5 days. We ended up having a natural resistance at 30,930 and natural support at 30,590. I end up seeing that the market end up pushing up towards the resistance, and I end up taking a sell at that resistance at that particular point, expecting that the market was going to end up falling down because it just showed from a weekly and daily perspective that the market was ready to be able to push bearish. Plus, we end up taking a look at it before. We end up having a block over a block. Anytime that you have a block over a block, that means that more than likely it's not going to go right back up to that last previous consolidation area and look to be able to find another support. So in the midst of being able to do that, news came out. First initial news dropped down. It dropped down almost 500 points on that movement, or dropped down almost 500 points based off of the first 3 minutes of that movement. The next 15 minutes, it went from retesting the overall candlestick, not being able to break inside of the vortex area, to making a full 100% retracement, and then after that, breaking right above this overall level towards the overall high, basically hitting another consolidation or hitting another bump of movement when it came down to just the next high volume node, right around 3,100. As soon as it did that, then the market decided to flush down. After taking everyone out that ended up deciding or that ended up knowing that the market was going to go bearish, and basically taking all that money out the way, and then after that, truly having everybody else be able to win based off of that movement. From there, the market went from having a 500 point move to almost a 600 to 700 point move to the upside to almost a 1,200 point move to the downside. Well, 1,100 point move to the downside within that same hour to 2 hour standpoint. That crazy stuff right there bothers the heck out of me more than anything else, right? And to me, to be honest, sometimes I just go back to this saying that that's just trading, right? I know I just went on a rant, but to me, that bothers me more than anything else from a technical standpoint. If you know what you're doing, right? From a technical standpoint, that should never happen, but it does, right? Market makers, whatever else you want to be able to call it, that's what's actually happening when it comes down to that movement. Speaking of that, let's go ahead and get into Dow Jones. Let's talk about what's happening overall. Did not take a trade on this overall pair. market fell back inside of that vortex area where we ended up taking that trade a couple days ago, and then after that, it fell down to 12,990. Currently, right now, the market is actually below 12,990. 12,930 at this particular point. I'm starting to see that the market is creating a consolidation. I would call at this particular point, if the market ends up pushing up to the upside, we have to consider that is the consolidation at this particular movement right there. We have to consider that as being a large, drawn out consolidation that the market has hit a few times before being able to make its move. Now, we ended up talking about last Monday, that we had a 900-point range. This one is a 500-point range at this particular point. Typically, when it comes down to that movement, I would still say I'm not necessarily interested in being able to make a trade off of this. And even going into tomorrow, I don't think that we're going to push up 500 points. Push up 500 points and then after that be able to break a level. So going into tomorrow, just non-farm payroll in general, just that news. I don't think that news is going to end up breaking us to the upside and continuing to push us above 30,500. All right, I think that we're probably going to end up seeing some erratic movement, push up, push down, stay in the consolidation when the market is ready to truly break. Then after that, you can be able to make your trade. Now, with that being said, as the market is being able to prove this to be a natural support, the question would be, okay, well, where do you end up getting out if you do decide to be able to take this trade? If you do decide to be able to take this trade at this particular point, if you're short in a position, I would look at being able to get in right when the market ends up breaking below 29,890. Take profit on this one. If you want to be safe, will end up being either at the past resistance term future support at 29,740, and have your stop loss just above the overall swing high to be able to make it worth your while, or you can be able to say, okay, well, this is the first time that the market has went back inside of this consolidation box. If the market's going to fall, then it's going to try to push down to at least where the market started off at this movement at 28,920. And with that being said, if it does break inside of consolidation, I will only look at being able to take it to the halfway point. So safe wise, if you're just looking at being able to get a trade and try to get out of it, 29,740, 29,750 would be the area where I'll look at being able to get out for sales. Now, if the market does push up, we'll be running right into another consolidation panel or consolidation box to the upside. Once again, may not necessarily be the greatest trades to be able to take on both ends, but you bind it up to the upside. I would go from here to there with a stop loss of wherever the swing low is at that particular point. So the take profit point will end up being at 30,650. But other than that, there's really no trade to be able to take that I would be truly interested in on US 30 going into tomorrow. The news is, I don't think that the news is going to make the market just push up that much. Not non-farm payroll. Non-farm payroll hasn't been the same in the last few years. Okay, typing a Y, yes, if that makes sense. Not going to place in the orders yet. I'm just trying to get an understanding about what happens. I will place the orders if the market ends up pushing bullish here. If the market continues to push bullish here, then after that, I will consider being able to just go ahead and set in my trades once the market hits the halfway point. Okay, so there we go right there. If you have any questions about that, make sure that you end up typing inside of the chat box. If you don't have any questions, then we'll kind of go from there. All right, that's US 30. Nas 100. Let's talk about that. Nas 100 went from being able to break out of this overall movement that we talked about yesterday, 11,500, trying to go up to 11,700. Got all the way up to 670 to that 670 area, and then after that started to retrace a little bit. What it ended up doing was it actually ended up building out another consolidation area. And if we're being true, I'm going to call this the consolidation block right here. But if we end up being very honest, you can call it another larger consolidation area just in general, especially if we're going inside of another one. But that was the true vortex area when the market actually ended up falling. So, or low volume node area when the market actually ended up falling. So, resistance on this one is at 11,600. I'm going to say 11,660. Support of this consolidation would be 11,430. But really and truthfully, if I'm looking at this would mean to me, based off of this movement, that the market is going to push up bullish. Um, and the market will stay bullish at this particular point. There's about, how much is it in this range? How much is it in this range? There's about a 228 point move. I mean, that can be hit in a day. If we're being very honest with Nas. I don't believe that the market is going to end up moving to the downside. History will typically tell you if you end up having a block, they end up pushing at this particular point to the downside. It doesn't necessarily fall back inside of the previous block. And then after that, make a move. But if we take a look at what happened with gold, that's exactly what happened with gold. Market ended up breaking below 1658. Then after that, pushed back up above 1700, and it went back inside of that large consolidation that was there for about 2 or 3 weeks. So, Nas 100, I won't do anything with tomorrow at all. Won't do anything with it tomorrow. Any questions on Nas? Any questions when it comes down to Nas? I will not do anything with Nas tomorrow. S&P. S&P end up, we talked about how it probably was just going to end up showing us a deeper consolidation. Market end up breaking below this overall support at 3750. Since then, the market has fell down and started to build out consolidation. Now, with that being said, we can build this out and say that this is our true natural support level. Or better yet, we could say that that is our true natural support level on this overall movement. And that puts us in a bad position on being able to trade this for a while until the market actually truly breaks out of that area. Now, going back to what I said before, if it falls, it's going to fall down to another block to the downside. If it pushes to the upside, then we have a little bit more smooth selling that we can be able to work off of when it comes down to that movement to the upside. I'm going to go up to 15-minute and kind of show that a little bit more. Either way, the ranges are getting to a point to where we're really going to probably see the market kind of slow down at some point. And at this particular point, I don't like that personally. But there's nothing I can be able to do if we're going to take a look at how the market's going to react off of that. Now, if the market pushes up bullish and we end up having a very long position, if the market continues to be able to run, then obviously you have a couple take profit levels that you can be able to get out. The ultimate long-term move will end up being up here, which will end up being 3,900, essentially. You want to feel comfortable in being able to get out, you could say 3860 would be the next area. But obviously you got to move your stop loss a little bit tighter when it comes down to that movement and everything else that goes along with it. I like the opportunity of being able to see that this market could go for a little while to the upside and kind of push up to this area and kind of fulfill this overall gap, overall space. I actually like that better than what I see with Nas 100. I actually like it better than what I see with US 30, if we're being very honest. It's just that XPX moves very slow. And sometimes are you willing to be able to take the time to be able to stay in a trade like that overall? So I'm gonna wait before kind of giving out some numbers on that. I do know that the take profit that I would look at being able to get out at will be at the top of the resistance. And we end up going from there. How do you get the number count in your volume profile? Good question. If you double click onto it and you go to style, what you end up seeing is volume profile values. If you click on the values, then after that, it lets you know. And that kind of gives me a very good opportunity to be able to know, or give me more of an indicator to be able to know, okay, well, if there's going to be a large amount of people, or historically, if there's been a large amount of people that's trading inside this area, even though I would like to be able to take it up to a certain area, I'm probably going to get stopped. So essentially get out before everybody else starts to be able to get in. And if I can be able to get out before everybody else ends up getting in, then I feel I'll feel way more comfortable in being able to take that trade. Well, I'll feel more comfortable being able to set my profit there and be able to allow it to move. Um, Half of the problem when it comes down to trades is allowing the market to be able to move to your take profit level where you think it's going to go. Um, Sometimes you're right, sometimes you're wrong. Sometimes you can be spot on. Sometimes there's something from a news perspective that just may be off. Now, in our situation, I'm seeing way more consolidation just from these overall spots and not necessarily large free run areas. Like if the market, once the market ends up breaking above 39.40, then we have a very large run area all the way up to 4100. I'm excited about that for the trade. I can place that in as a pending order right now and feel comfortable in that trade wherever I make it at. But certainly right now, there's a few areas that we have to be able to pay attention to at this particular area. Good question, Jay. Great question. But take profit level will be at 38.50 if that does happen. Second take profit level, you end up taking that trade just based off of historical data. We end up being up here at 39.10. Let's see. That's cool. I have Swiss cheese knowledge of trading view after 1 year using, and everything still feels so no. I mean, that's so much stuff that TradingView does. I mean, there's so many different contributors of new, excuse me, of new expert advisors and indicators and everything else like that. And obviously, with all the news that end up coming from Russia, then I mean, the one group that can be able to take advantage of that would be TradingView. If we're being very honest. If you're not going to be able to use MetaTrader 5, then who are you going to use? Well, you're going to use TradingView because everybody was using it in the first place. Well, they have a portion down here. They have a trading panel to where you can be able to pick one of these brokers that they have and be able to trade just on this platform. And you don't have to use MetaTrader 5 or MetaTrader 4. For me, for a person that's been building automation systems on MetaTrader 5 and MetaTrader 4, it kind of sucks. But at the same time, you got to be able to move with the times as well. All right, here we go. DAX. So we went over this yesterday, and it happened this morning as well. We talked about this counter trend line break that we're kind of looking at being able to get into. Now, once again, I told everybody that I was not trading today, and I meant exactly what I said. I was not trading today. It didn't matter to me about what move could have happened. Even though DAX is not necessarily a U.S.-based pair, I just wasn't necessarily feeling the overall move the day before high impact news. But there was a trade that we ended up getting into where the market was at 12,510. The take profit, I believe, was at 12,350 for the overall movement to the downside. What ended up happening was that it broke down, went back up, and then after that broke down again. I ended up taking profit right around this area when I seen the market start the U-turn. Everybody give me one quick second. Give me one quick second. Okay, sorry about that. So, okay, I'm trying to get my train of thought. Oh, okay. So, what I ended up seeing right before the 6:30 news was that the market ended up breaking earlier during the morning. We end up taking this trade all the way to the downside again, expecting that it was going to end up fulfilling that overall position. And I ended up noticing that the market really kind of hovered around this spot. And obviously, to me, that just looked like a double bottom, right? And typically in double bottom fashion, you end up seeing that the market will start to retrace a little bit. And the one other thing that kind of got me nervous was that the market was in the buy zone at that particular point, and it was 6:30, and we're going into that 7 o'clock time. So for me, once again, a day before news is going to end up coming out, to me, I expect that the market was going to end up popping back up. What happened was that the market ended up breaking the past resistance, turning into a future. breaking a past support, turned into a future resistance, and then after that kept on moving down from there. Now, the market is in the sell zone, and it would not surprise me if the market ends up breaking down and finally completing this move later on tonight. The question is, do you want to take the trade? Is it worth it to be able to take the trade at this particular point? I'm going to leave that up to y'all. I'm going to ask y'all that question. Would y'all take this trade based off of where we are right now, 12,420, to the downside, placing your stop loss above? If you're going to do this, you'll place your stop loss above the nearest high volume node at 12,483, with a take profit of the take profit, well, we were saying that being able to get out at 12,360. So 78 points for 50. 50 for a loss, 78 for a win. Are you taking that position right now? Yes or no? What is your two most profitable trade patterns? I show y'all that. To be honest, I show y'all that every day. Legitimately, are you talking about? Okay, so are you talking about candlestick formation patterns or what I'm seeing from a bottom profile breakout? Because bottom profile breakout has been my most profitable trading strategy. Um, um, I would say, okay, Fibonacci retracements and extensions, anytime that it gets up to the sweet spot, 618, 786, or 86, anytime that it gets up there, and you end up having a daily and a weekly trading in the same position or trading in the same direction, then I would look at being able to take that trade. Brian, what's going on? OG's in the building. OG is in the building. Um, Typically that's the number one. That was my bread and butter of being able to take a trade like that. Typically it was a 3-step rule, and I might as well say the 3 steps we talk about in the precision entry point trading course that we end up doing. Got to have time frame alignment with a weekly and daily to trade in the same direction. Once you end up having a weekly and a daily trade in the same direction, then after that you go to your lower time frame, whatever that is. For me, it was a 2 hour. I look for the market to basically have all of those things kind of aligned. Then I look for a counter trend line break in the sell zone with a candlestick formation. My favorite candlestick formations are evening stars and morning stars. Obviously, a 3-bar candlestick that kind of gives you a little bit more confirmation about what happens. You can get into it once it breaks the counter trend line break, or you can get into it once the market ends up giving you um, a retest of that movement. Either way, risk reward is typically good on those because you place your stop loss above the Fibonacci high or the Fibonacci low of that movement, then you have a better chance of being able to win. That was the original one. Now it's mainly bottom profile breakouts, especially the way that the market has been pushing right now. And we talk about that all the time. I don't go through the full strategy, but we talk a good portion of it. Once again, great question though. No, I wouldn't do anything with German 40 either. I'll wait to see how the market's going to end up reacting off all of this stuff. To me, the risk reward is off on this one as well. You would have got to it earlier this morning. Uh, yeah, you would have got to it earlier this morning. Maybe it might have been there, but nah, I'm good on that. That's about it. What other pairs would y'all like to be able to take a look at? I'm gonna leave the floor to y'all. I got about 2 to 3 more minutes. Placing some of the pairs, we'll go rapid fire on them. If there's any pairs y'all like to take a look at, we'll go rapid fire on them real quick. Oh shoot, what is that? What did I click on? Oh, okay. Did my stream die? I hope not. Uh, New Zealand Swiss franc. Oh, I clicked on a hyperlink. Silver. If I missed it, I had a phone call. I took a look at gold. I didn't take a look at silver, but I will take a look at that. Steve, give me a second. And New Zealand dollar Swiss franc. Brian, why you want to? Random question. Why you want to trade a very slow moving pair? This random question. Thanks in consolidation, but I don't paper trade anyway. Oh, I just like it. Understandable. There we go. Man, it's been a while since I looked at this chart. Let's see. I go through it real quick. Let's go to the weekly. It's my swing trade. Okay, fair enough. All right, so okay, nope. Go to the fractal. Matic, okay. Cryptocurrency pair, cryptocurrency in general. All right, here we go. So weekly went all the way up to the 8.6, which means that the D extension is going to end up being the 118. That position is expected to be hit at 50.26. So 50 when it comes down to that movement. There is a weekly support when the New Zealand dollar ended up having that big flush about a couple years ago, uh, when all of the New Zealand dollar pairs and all of the Australian dollar pairs end up falling down to that natural support at 50, 50.97, 52.97. So 53 at this particular point. What happened yesterday was, or last week, was the market fell down to 55, 15. I think there's still some more movement to where the market could fall down a little bit more to the downside, but from a weekly perspective, the market is getting into the buy zone. Now, this has been how many weeks has this been of the market basically falling down? Been 83 bars, so 83 weeks of overall bearish movement. Um, and typically the Swiss franc only gets strong when people are in fear about what's actually happening. So um, obviously the market overall movement is to the downside. Doesn't necessarily mean that it's going to continue being continue being that way. Don't necessarily know, but I'm going to still consider it being bearish at this particular point. Doesn't matter if the weekly end up having a bullish move. For 83 weeks, the market has been bearish and it hasn't necessarily made a double bottom, so I'm still going to consider it being bearish. Uh, we take a look at it from a daily perspective. Come on, come on, come on, come on, come on. Find that fractal. All right, well, forget it. I'll do it myself then. There goes your A. Here we are on this move right here. So essentially what ended up happening was the market ended up completing the D extension at, what is that number? Okay, it's not giving me the number. Okay, market ended up completing the D extension right around, I'm going to say 56.20 just for the sake of giggles. Matter of fact, we can look at it at this low. 55.93. Okay. From here, the market is going through another phase of retracement, another phase of fibs. So it's done went through 1, 2, 3, 4, 5. This is 6 different swing when it comes down to this movement. At this particular point, market when it ended up basically retracing off of that, gave a bullish engulfing candlestick. The last few days have been testing this overall move when it comes down to that. The market is in a no trade zone and it's basically retesting this overall move. It's not deep enough to be able to give a strong retracement, or it's not deep enough for me to be able to say I'm ready to be able to sell it. But overall, from a weekly perspective, it's not strong enough for me to be able to say that I will buy it. So for me personally, Brian, I wouldn't do anything. Um, I, Personally, I would love for if this market was to push up, because this is a R5 trade, meaning that the market has hit a retracement now. At this kind of, you would like to see that the market will push up to the 382. Um, so as this market is this retracing, I would love to see that the market will at least gravitate towards the 382. Um, from a risk reward standpoint, it's not there. 100, nah, risk reward standpoint, it's not there. Uh, I've been selling this for the last month. Heck, I would have been selling it for the last 83 weeks if I knew it was going to happen. But yeah, heck of a move. some pairs just have that overall movement, and it's just been going in that same direction for so long of a time. And then after that, some pairs are kind of like um, some pairs are just kind of like Canadian Swiss franc, where the market just doesn't move anywhere for the last 5 years. I haven't looked at the Canadian Swiss franc in a while, but there was about 5 years of consolidation. And it's still in that consolidation. Good Lord. Yeah, I mean, it's nothing to do off of this chart. If you're a person that doesn't like trading consolidation, I mean, there's no way that I look at this chart and even think about trying to get into it. Um, let's see, Matic. Let's take a look at Matic, and I think that was it. We'll close off with Matic when it comes down to the movement. Let's see. Oh, it's a grid killer if we're gonna end up doing that. And block, if that's the case, I'm buying your EA. Forget it. If that's gonna end up being the case, I would. There's no way. How could you lose money on that? Like, there's no way that you can lose money on that from a grid perspective. Let's see. Matic, from a weekly perspective, I don't know why I look at weeklies when it comes down to cryptocurrency. It doesn't make any goddamn sense, but we're going to do it anyway. Um, let's see. Okay. All right, talk to me. Are you in? Are you out? Or are you waiting? Well, you in? Are you looking at buying, selling, or just waiting? Well, obviously, I think you're looking at buying. Are you in a pair at this particular point? Well, I keep on saying Matic is a pair. Are you in the project right now? Yes or no? Okay, waiting for a buy. I wouldn't look at. I wouldn't. I would look at two different positions to be able to look at buying if you're trying to get in. Hopefully, the market kind of falls off a little bit more if that does happen. You can be able to get in. You could be able to get in if the market ends up falling down to, okay, that's not necessarily a natural support. Um, I'm going to call that support, but that's not really a it's not really a support. Um, the market falls down to 69, 69.50. If it falls down to 69.50, then after that, I would look at being able to get in um, before it's being able to buy. Obviously, what day was this? On August 17th, when the market ended up bottoming out, it ended up falling all the way down to 35 cents. God, that's a big jump, 2x right there just by itself. Um, yeah, I think the next viable position to be able to get in will be right around that 69 to 70 area. If you could be able to get in right around that area of being natural support, um, then I think that would be a great area to be able to hop in and being able to make that move. Um, Obviously, keep your eye on Bitcoin and see what's actually happening with that. That kind of let you know what's going on with the overall position. But I think that if it's in the sell zone right now, so we probably got another at least another 7 to 11 days of overall bearish movement. And don't let there be any bad news when it comes down to Bitcoin in general or this Matic in general. Uh, I do see that the market could potentially fall from that overall standpoint, but cannot call it. Well, maybe I could. Yeah, I would look at trying to see if the market could be able to fall and at least double bottom at 70, right around 70 cents. If it does, then I would look at being able to get in right there, as long as it holds. Um, Now, obviously, you want to be able to get in all your pairs before the thing ends up hitting a dollar. Well, is that a dollar? Or 1.0. If it ends up hitting 1.0 again, then after that, I think it'll skyrocket and start to make its push back up. But um, 2020 hasn't been or 2022 hasn't been a great year for cryptocurrency, which is a good thing for people trying to buy, which is a great thing for people trying to buy at this particular point. All right, so let me go ahead and cut off out of here. I gotta put the little one to sleep and be able to go from there. If you like what I end up doing, please make sure that you end up clicking on that boost button. For the people that have just clicked on and followed and everything else like that, one, I want to make sure that I end up saying thank you. I truly do appreciate that. I want you to understand that obviously going 2 times out of a week and trying to make sure that I can be able to help out as many people as I possibly can and taking out the time to be able to do that. It's always nice to be able to know that people actually end up uh, taking that and being very serious when it comes down to that, and actually clicking on that boost button and clicking on the follow button, and obviously being able to hop into what we end up doing with the Discord and everything else like that. Heck, I've put out over 150 something videos. Um, I done pushed out almost 150 something videos on YouTube, and quite frankly, my numbers still haven't moved. Evidently, the algorithm just doesn't like me. So, I mean, seeing what's happening when it comes down to trading view and everything else, we finally done got to a point to where we're trying to make a move, and I want to keep on. I want to keep on going on this ride with y'all. So we end up going from there. Like always, make sure that you end up planning your trade your plan. Be safe tomorrow when it comes down to trades, or just basically stay away. I'm more than likely I'm probably going to stay away. I like to enjoy being able to have large funds in my account and not losing it for stupid reasons. So we'll see how everything goes from there. All right, everyone, take it easy. I'll see y'all. I'll see y'all next week. We end up starting all over again. All right, take it easy.